Since September of 2021, gold is up 55%. Silver is also up 55%. Exactly the same. Pretty sweet, huh? Well, for those of you new to my channel, let me remind you of my perspective on gold and silver. Those of you who know my Stacking the Yankee Way strategy know I will not sell any of my precious metals. You know, I've converted a lot of my fiat currency into gold and silver for really good reasons. Why would I move back into depreciating dollars? I won't. Okay, so this stuff I buy and I never sell. But why did I cherry pick September 2021 as the start for showing the rise in the spot price of gold and silver? Well, it's because that was the month I went in on another commodity I want to talk to you about, one I bought to build a little of my wealth, not just preserve it. And since I got into this commodity back in September of 2021, it is up 204%. Now, I will sell my commodity stocks for a profit. I've done that before, but I'm not there yet with my uranium holdings because I think, just like gold and silver, we're just getting started with a uranium bull run. You know I'm a hardcore stacker, but I love to educate people in other ways to potentially invest in. So listen in as I interview my sponsor today, Scott Melby, CEO of Uranium Royalty. What's up, Scott? Good to see you.
Yeah, absolutely good to be on your program.
Hey, man, I'm a big proponent of uranium, but my YouTube channel is mostly about gold and silver stacking. We love this stuff right here. Our community is super big on wealth protection with physical precious metals.
Absolutely. Listen, I grew up in a mining family. My father was a graduate of the School of Mines in Golden, Colorado in 1950. It was instilled into me at a very early age the importance of holding hard assets. I remember as a kid running my hands through trays of Krugerrands, and obviously was intrigued by that. But the older I got, and today certainly is the case, I wish we could trust our governments to do the right thing with fiscal policy. I wish we could trust just about every aspect of our governments these days, but it's not the case. So I think investments, or at least having a significant portion of your investments in the physical commodity is really a smart thing as an individual. The company that I'm going to talk about today, we have physical holdings of uranium for that very reason, that in a tight period of tightness, having the physical commodity really makes the big difference.
Let's talk about uranium. It's super hot. It's all over the news this past week.
When I've talked to people that have a real understanding of nuclear power, what their position is, it's probably the cleanest, safest form of electricity that we could generate. The point is they're better at it now.
Right.
What would you do?
Well, France does it. France is largely nuclear, and they build small, little, compact plants. And if they need more, they build the same thing and they hook it up, and they hook it up. And it is very clean.
It's almost every other day we have a new announcement from Amazon, Microsoft, Google, Oracle about the need for nuclear energy to power data centers to address the increased energy demands from AI.
So could you briefly just tell us about the reactor tech that they're going after?
Yeah, so there's three ways that the tech companies are trying to secure baseload carbon-free nuclear energy for data centers. One is to basically contract with a electric utility company like Amazon's doing with Talon Energy in eastern Pennsylvania to buy the output of the nuclear plant. So before it hits the grid, take that output and power their data center, which is located next to the plant. Microsoft announced last week that they were going to work with Constellation Energy to restart the 3 Mile Island reactor, which was shut in a few years back, to provide dedicated power for Microsoft. And then the third way, which is going to have to do the bulk of the lifting here, are new reactors. And the small modular advanced reactors, these are not the big 1,600 megawatt reactors that you're used to. They're 50, 100, 200, 300 megawatts. They're built in factories, shipped on site, and design, which for lack of a better description, it's like a gumball machine that uses spherical fuel assemblies. The uranium is inside the sphere, which is encapsulated in graphite, and these balls pass through the reactor, basically creating heat to boil water to create steam to turn a turbine generator. So the US needs to build new electricity generation again, not just the data centers, but the electrification of society, electric vehicles, homes and businesses switching to electricity has really created a situation where we need to build generating capacity in the United States again. And as you know, we haven't built, if anything, we've been taking baseload sources of energy off the grid and building intermittent renewables, wind and solar, which only run 25 to 30% of the time, not something that you're going to run a data center on. So, to have Peter Thiel, Elon Musk, Bill Gates, all advocating for nuclear is really, it's exciting. We've seen public opinion really turn favorable towards nuclear and politics. As you know, in the United States, we agree on very few things on Capitol Hill, but Democrats and Republicans both agree that nuclear fits in our energy policy going forward. We get there from different perspectives and for different reasons, but the fact is nuclear is now supported by the right and the left. So is nuclear power safe? Absolutely. I mean, over the last 60 years, it's been the safest form of energy that we've had in the world over that period in terms of injuries or deaths. So through weather events, cold snaps, heat waves, these reactors remain online and generate power when they're needed the most.
What does this mean for the uranium commodities sector in general?
Yeah, it's interesting because your listeners really follow commodities. So you understand the fundamentals of supply and demand that you would measure the potential for any commodity. And unlike base and precious metals, where it's a much more efficient market, the cycles are more frequent and price signals really result in production increases and production decreases much more real time. Uranium missed an entire 2 cycles of development. So now we're in this growth mode on the demand side for uranium, but we don't have a lot of mines on standby that can be brought on quite quickly to meet that structural deficit that we're in today. Now, the uranium industry has been in deficit for some time, but we had a lot of inventories. So we had an overhang of secondary supplies and inventories that made up the gap that production wasn't alone able to fill. Now we need new production. And that's where my company, Uranium Royalty Corp, is a financier to fund the next generation of uranium mines through royalties and streams.
Scott, when I look at a junior miner, whether it be, mining for gold or silver or base metals or uranium for that matter, I use what I call the Yankee quadrant. Could you quickly go over those 4 things for us?
So we look at those same 4 things and even more. We go into the geology, the mine engineering plan and everything else. But the company that I run, Uranium Royalty, was founded, taken public in December of 2019. We have decades of uranium industry experience. I go back to the early 80s and having held senior positions with some of the biggest uranium companies in the world. Our technical teams have explored globally for uranium, have built mines, licensed, permitted them. So our very small team is extremely experienced. Now, we shouldn't have a big team because we don't own the mines, we don't operate them. We are doing due diligence to select the mines that go into the portfolio for the benefit of our investors. Finances, we have a very strong balance sheet of over 300 million in cash and liquid assets. And you'll find it interesting that most of our cash is held in the form of physical uranium. Though you could earn 5% in a CD, having your cash just sit there, we want it sitting in physical uranium. And what's happened to the uranium market over the past months and years, we've seen significant growth in the value of that stockpile of physical uranium that we've held. We bought uranium at $20, $30, $40, $50 a pound and now uranium's trading at 80 or 90. So as we get royalty opportunities and we fund them and purchase them, we sell uranium to purchase royalties. Ownership. I'm a founder, a co-founder, along with Amir Adnani, who I came to work with at Uranium Energy Corp. We were co-founders, as was Uranium Energy Corp, vended in an asset and kind of provided our sweat equity to get this company up off the ground. But as it sits today, I would say 40% of the shares are held by either founders or kind of early foundational shareholders that are long-term holders of the stock and really want to see it grow to its full potential. 22 royalties that we have on 19 projects include some of the world's richest, highest grade mines in Saskatchewan, Canada, with Cigar Lake, McArthur River. We have interests on a big conventional mine in Namibia, in southern Africa, at Langer Heinrich, operated by Paladin. We've got interests on U.S. in situ mining in Wyoming. It's a way for an investor to get uranium exposure, but not be putting all your eggs in one miner or one company with a small number of operations. We've got built-in diversification.
I have to ask you this, though. Is it too late to get in to uranium, especially Uranium Royalty Corp?
Yeah, no, it's a great question. I don't think so. I mean, if you look at the commodity cycle that we're in right now, I would say we're in the first or second inning, given what's happening. I mean, this whole tech entrance into our industry is a fairly recent phenomenon. Political bipartisan support of nuclear power hasn't been around that long. And our energy needs globally, we're talking about the developed world. What about the developing world? India, China, countries like this that are building reactors. We've added 70 reactors in the last 10 years globally, and we have another 70 under construction, even before the small modular reactors. So you're not too late to the story. Although I will say, with these developments, we've seen uranium royalty, rally pretty significantly, up 60% in the last month or so. But it came from a period where, when uranium prices kind of went up to $100, $106 a pound, came down to 80 around where we are today. That kind of spooked a lot of investors. So a lot of the uranium equities did come off and approach more their lows than their highs. But I wouldn't wait long. The story is unfolding. But there's still a lot, it's going to take a while for the sufficient a number of mines to be built around the world to meet the growing demand for uranium and nuclear power.
The ticker symbol on the NASDAQ is right there on the screen. It's UROY, UROY. For you Canadians watching, the ticker symbol is URC. It is really cool that you're on the NASDAQ. That's awesome.
We were the first pure play uranium company on the NASDAQ, and it was a huge development for us. Nothing against the Toronto Stock Exchange, but our trading volumes quadrupled almost overnight trading on the NASDAQ. And we get a lot of exposure on CNBC or Fox Business when there's uranium stories. Our ticker symbols scrolling across the bottom of the story. So it's an exciting model, the royalty and streaming model, as a way to invest in base precious metals and commodities like uranium. Very well accepted. Franco-Nevada, Wheaton Precious Metals, these companies have become multi-billion-dollar firms in this field. We're just following the same model and taking it to uranium.
That's excellent. As always, do your own research on uranium royalty before you invest a single dime. But if you're into trading, at the very least, I encourage you to put them on your watch list. Thanks a lot, Scott, for joining. I appreciate it.
Thank you very much.